It does not matter how slowly you go, as long as you do not stop. Confucius. Hello, my name is Breon Mills and welcome back to my channel. And welcome to the first in a series of videos on candlesticks. Using candlesticks will help you better gauge the market, predict price movements, and more importantly, it will help you build wealth for you and your future generations. The goal of this training today is to provide you with a basic understanding of the components of candlesticks, what they mean, and how to implement them in your strategy of trading. All right, you ready? Now, what are candlesticks? Now, candlesticks provide a representation of the movement of a price, allowing quicker identification of the sentiment of the market. Now, candlesticks, they originated from Japanese rice merchants and traders to track market prices and daily momentum hundreds of years ago before being popularized in the United States. All right, that's a little bit of history on candlesticks. All right. Now let's take a look at candlesticks and what are the basic components of a candlestick. All right, there are three things that we notice when we look at a candlestick. Number one is the body. All right. Number two is the shadow or the wick. So these lines protruding from the top and the bottom of a candlestick are what we call wicks. And third, the color. Now, green is what we call a bullish candle, and red is what we call a bearish candle. Now, let's take a look at a bullish candle and what it represents on a stock chart. Now, when it comes to a bullish candle, the body of the candle will always represent the opening and closing price of a candle. All right. So when you take a look at a green candle, the open price is at the base of the candle, and as the price increases throughout the day, you will have a closing price at the top of the body of the candle. Throughout the day, you may have some highs or some lows, and that's what these candle wicks represent. So the bottom wick represents the low of the day, and the top wick represents the high of the day. Now let's take a look at a bearish candle. Just like a bullish candle, the wicks, the top wick represents the high of the day. The low wick or the wick at the bottom of the candle represents the low of the day. But on the bearish candle, it's the opposite. So the opening price is at the top of the candle, and as the price lowers throughout the day, it closes near the bottom or the base of the candle. So the bearish candle opens at the top of the candle and closes at the base of the candle. All right. Now let's take a look at a stock chart here. Now, when you take a look at the chart, there are many different sizes of candles. You have some candles with long bodies. You have some candles with very short bodies. You have some candles with long wicks. And you have some candles with no wicks. And we're going to go deeper into detail about what these candles represent. All right. Now, when you take a look at a stock chart, you can see that these bulls and bears are in a constant struggle. So when we see a green candle, the bulls were in control. When we see a red candle, we can see the bears are in control. And there is a constant struggle for control. And as traders, our number one goal and focus is to identify who's in control. Is it the bulls or is it the bears? All right. So when we take a look at a candle, for example, this is a considered for the purpose of this training, we're going to use a 1-day candle. When you take a look at a candle, there is so much more going on besides the one candle that we see. For example, this 1-day candle represents a bearish day. But let's take a look at what may happen when we try to break down this candle on an hourly level. So when we take a look at this candle, we can see there was a continuous battle between the bulls and the bears. When the market opened, the bulls tried to take control, but over the course of the trading day, the bears took control of the market, and we closed right at the closing price, which is the base of the candle. So we can say that there were battles between the bulls and the bears, but the bears ultimately won. Now let's take a look at a bullish candle. Now these are just an example of what can happen. And so today on this 1-day candle, we can see that the bulls were basically in control for most of the day. We did have one day where, we did have one period where the bears were in control, but for the most part, the bulls just dominated the day. Okay. Now, let's talk about developing a strategy. As traders, there are 3 things you want to identify before you jump into a trade. And we're going to go over those 3. Now, number 1, we want to identify a trend. We want to make sure that a trend is present because ultimately we may want to follow that trend. All right. We want to know if it's trending up or if it's trending down. And as you know, as traders, we can make money either direction. All right. So number 1, we want to identify a trend. Number 2, we want to identify a pattern. Once a trend is taking place, next we search for specific patterns to help position ourselves for an entry. Then third, we want confirmation. All right. So once we identify that a trend is taking place, next we search for a pattern. We look for a pattern, then we look for a candlestick that offers us confirmation. Then we take the confirmation and then we jump in and hopefully profitize off of our move. Now, we want to place trades when there are trends that are likely going to reward us. All right. So there are 4 tradable trends that we can use to build wealth and to be successful in our trading days and be successful on our trading journey. The first trend is the continued uptrend. We can see by the candlesticks that the trend is trending up. Then all of a sudden there's a continuation candlestick. Then after the continuation candlestick, we wait for the next candlestick, which will provide us with some confirmation. Then next thing you know, hey, we're jumping in, we're off to the races, and we're making money. All right. The next tradable trend that we like to follow is a continued downtrend. We see that there's a downtrend happening. We wait for the continuation pattern candlestick. Next, we wait for the confirmation, and then we jump in We place our put options or our shorts, and hopefully we make money on the ride down. All right. The third tradable trend that us traders like is the bullish reversal. Now, there are opportunities where we can see the trend is trading down, and all of a sudden we see the bullish reversal candlestick. Then comes another bullish candlestick for confirmation, and we jump on in and we ride that wave on up. And the fourth is the bearish reversal. So a trend or stock could be moving up quite nicely, and then all of a sudden the bears say, hey, it's time for us to get in on this thing. Then we will have a bearish pattern, then followed by a bearish confirmation candlestick, and we could either sell this stock and get out of it, or we can jump into it and ride this stock on down, making money. All right. Now, this is the trend that we don't want any parts of. This is called the sideways trend. Remember, I identified 4 trends that we like. This is the 5th trend. We don't want this trend. We don't want any parts of the sideways trend. All right. Because a stock can be trading sideways. Then all of a sudden we see a bullish confirmation candle, and it could continue trading sideways, or it can decrease or go down. The stock price could start going down, and ultimately we're losing money on this trend. So again, we want to trade trends that are in our favor. Okay. All right. On the next video, we're going to start identifying candlesticks that we like to use to enter and exit trades, starting with the doji candle. I appreciate you all for being here today. Be sure to like this video. If this is your first time, make sure you subscribe and come on back for more wealth building information. Peace.